Hey folks, it's June 9th, 2020. The time is 3:23 p.m. Central, 4:23 p.m. Eastern. The markets are closed for the regular trading hours. Let's begin with an evaluation of where we are on the timing calendar. And as we can see, the timing top is starting to get respected. And so this kind of starts to roll over tomorrow. And so the expectation is we might see something like a down move initially, and then another shallow retest before a larger whack down to the downside into our 11th CIT. Uh, the 11th CIT, technically, from all the experience of watching these CITs on the timing calendar, should be after hours on 11th, but we'll have to basically take money and run uh, when we feel that our stomach is full. The reason is I expect a full retrace after the CIT. So if we try and time, um, the precise number of handles lower, there's a good chance we might miss out on the gains. So this position is not for hold, and once I get into the models, you will see why we need to TMAR or take money and run. So no changes. There is no breach of the timing calendar. Monthly wick cycles, the expectation was from yesterday's high will start to roll over because we're at least 2 to 3 sigma away from the monthly waves pivots. And for tomorrow, that comes in at 3119.43. And what the market is trying to do is test this once again to ask itself, is it okay to continue upwards? And obviously, from timing calendar, we know it's not. On the daily cycles from the unified model, this actually is from yesterday. That was the predict that we will not break the highs and move towards 3176.75 here. The actual forecast was we breach 3186 or 87. We got pretty close at 3190, I believe, and the candle looks like this. So the range was a good hit, and this is how it panned out today. Another thing to note is today's close is, and by the way, this is based on SPX cash, but obviously on ES, we were kind of testing this after hours yesterday, the highs from yesterday. Uh, we have successfully closed below the midline, so we are technically under in the bearish territory right now as of today's close, as per the unified model. So the probability of a back down between 10th and 11th is very high at this point. And the game plan for the market will be to go and test the lower end of the unified model, which comes in at 18.3118.54, which is in essence same as 3119.43 from the monthlies. So that's from the unified model. We have a successful close after a very long time below the midline and right on time. So this kind of bolsters the short case, but I will show you the reasons why it doesn't uh, still issue a screaming sell. Obviously we can stay short with strict stop loss, which I have given in the chat. Looking at the Mechen model, we have more failures, but let's review from the top. If you look at the weekly pivot for this week, it's higher than the monthly pivot. So this week is range trade that was there in the Sunday forecast. Any decline should tend to recover. The midpoint between monthly and weekly pivots on the Gann scale is 3103.26. This should support this week. Approaches of this should be bought actually for the short term. Um, and so now let's analyze today's numbers. If we look at today's numbers, today's close is actually below the PM pivots from today and yesterday. So that's again bolstering the case for short, but we still don't issue a short. The model still doesn't issue a sell signal. Sorry, not short. And Ideally, we should have closed below 3203.76 to issue a sell signal. If we move below this after hours, then that's again positive for shorts. Yesterday, we said that once we move below 3224.89 after hours, a sell signal is in place. We can use stops here, and then once this is breached, we should hit 3206.33. If that's breached, then we should approach 3187.78. We got 3190 into the aforesaid time, which was given as 4 to 7 a.m. and was unbroken the entire RTH. So now if we look at today's strategy grid for Elliott waves, we actually have a sell on hourlies. We should get a retest of this and fail. We kind of got this retest right after the market closed. Moving below this points to 3200.66. But really speaking, we need to get below 3187.78. And that's a red alert for a fast move lower. And the fast move lower, in essence, we get since the weekly wave is supporting here on Elliott waves, I think this number should basically stop the decline. You know, it doesn't have to be precise, but approaches of this number, which is same as the Gann's weekly number. So that's that. So what can we infer? Visually, well, let's review the smart CITs. I had 12 a.m. sharp, which is um, here, not a precise CIT, but if you were able to assess the hourly closes declining into 12 a.m. and bought here, that was worth about 40 ES. Similarly, now we are coming here. This was 2:10 p.m., but the actual close is closing high on hourlies is 3 p.m. And if this clicks, we're looking at 31.32 from the neural. What the actual value would be, we'll have to see based on timing, but 31.32 seems pretty right for a touch this week. And then obviously, like I'm saying, uh, parsing through all of the models, we should get a complete retrace, which most likely would issue a sell on Friday again. And then if you notice, we will get a retest 6.5, 6.15, same CIT strength. So some kind of a retest will occur. Should be a lower high, not expecting a higher high, but when you follow time, and you take what you have in terms of price movement. So we'll tackle that later, but in terms of alternates on the waves, I can see 1, 2, 3 apexes so far. And if this apex is this one and this one is this one, then we have kind of completed this wave. So my my primary alternate is decline after hours first, and then a retest by tomorrow morning before a sharper move down. Alternate could be one more retest, which actually goes above the RTH high. A very low probability, but it is possible. You can see visually why. And then a back down. So that's the update, and maintain your stops and good luck.